This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hey team, we have a new sponsor here at the Crypto Conversation, BitGet, one of the world's leading copy trading cryptocurrency exchanges. Yes, indeed. What happens if you've got the funds to invest, but you don't have the time to keep track of the market? You still want to make smart money moves. What do you do? Well, copy trading is a popular choice for beginner traders. You can shorten your learning curve by uncovering tips and strategies from more experienced traders. BitGet's copy trading platform has over 80,000 elite traders to choose from and 380,000 followers just like yourself who are already using the BitGet copy trading platform as a potential passive income stream. All it takes is one click. You can subscribe to an elite, profitable strategist, set your limits, automate your orders, and monitor their trades. I've got some links in the show notes below. One link will take you through to the BitGet sign-up page, give you a VIP discount. So learn all about it for yourself thanks to BitGet. And now it is on with the show. My guest today is Joel Kruger. Joel is a trader. He is a collector of digital art, NFTs, and Bitcoin as well. Plus, he is a strategist at LMAX Group. Welcome to the show, Joel.
Thanks. Good to be here.
Good to have you here, Joel. Let's do what we do at the beginning of the show. Be great if you could introduce yourself. Love to just hear a little bit about your story, your background, and what you've been doing in the lead up to getting on board with the team at LMAX.
Sure. So, my background is in investment banking is kind of where I started out. And I found my way from investment banking into trading currencies, discovered the trading floor, fell in love with it, and then quickly kind of found my way into the currency market. And made a career working in FX and trading FX, and along the way had the pleasure of meeting LMAX Group and CEO of LMAX Group, David Mercer, and we kind of hit it off, and off we went, and that's kind of the very short, quick story to get us to this point.
Sure thing. So what I'd like to do today then, Joel, is I think we'll talk a little bit about the LMAX Group. We'll talk about your role there, and then perhaps talk a little bit about trading, your thoughts on trading, the markets, and even delve into the wonderful world of digital art and NFTs if we have time. How does that sound?
Sounds great.
All right. Well, let's do the LMAX Group first. Love to just understand a little bit more about your role there as a strategist, and maybe just for people that aren't aware, just give us a bit of an overview of what the LMAX Group is.
Yeah, so we're an institutional exchange, and we have our bread and butter, our start in trading FX markets. LMAX Group, on the FX side. We have exchanges set up all around the world. We have, some exchanges in London and New York and Tokyo and Singapore, do about $25 billion a day in volume on the FX side. So we're pretty well established in that space. And in 2017 to 2018, we launched the LMAX Digital arm, offering institutional services for the main cryptocurrencies, and so we've been off with that. Started in our first year doing about 20 billion in volume, so off to some a very early start in those early years, and now kind of in 2022 we did about 200 billion in volume traded, which is about 10x that, and up to about 500 billion in cryptocurrencies in 2021, and so it's been a nice run. So the bread and butter, the kind of the early formation of the business around the FX side, and now we've started to really grow on the LMAX digital side, offering the cryptocurrency exchange. As far as my role goes, I work on the strategy and research side, so providing our clients with daily updates on global markets, FX, commodities, S&P 500, kind of the major markets, giving an overview of what's going on from a fundamental and technical side of things. Also providing daily insights to our clients on the LMAX digital side, cryptocurrency updates, and keeping them up to date on what's going on in the market. And then just kind of always being in touch with on the internal side with our people for insights on direction and strategy across the desks. So yeah, that's kind of an overview.
Very nice. Thank you, Joel. And tell us then, with LMAX Digital, the crypto side of the LMAX Group, very much aimed at traders by the looks of things. But can you give us a sense of, I suppose, where in the market you sit in terms of the different client and audience segments that you're serving?
Yeah. So again, we've always been focused on the institutional side of the business. A lot of our clients are kind of proprietary trading firms, and that's kind of alternative asset managers, and that's kind of the where our clients sit as far as that goes. So not a retail side, but more on these institutional type players.
Yeah, makes sense. And it's a funny time in markets, and I suppose, the world in general, really, to be frank, Joel. But I'd love to get a little bit of a sense in terms of where you see the various different markets at the moment in terms of different market cycles. Yeah, what are you thinking?
Yeah, sure. It's a lot to unpack there, but
it's a broad question.
Yeah, it's let's just break it down, from a traditional markets side, and then maybe give some insights into the digital space, into the cryptocurrency side. So from a global macro perspective, when we're looking at traditional markets, currencies and equities, clearly a lot of what's been going on has been extension of what we saw in the crisis of 2008. We're at a point in the cycle where inflation has started to turn back up, and that's forced central banks into a position where they can no longer be as accommodative with their bias towards monetary policy, and rates have been moving higher in response. And clearly the market is a little bit bothered by that. Higher rates doesn't have a great impact on equity market valuations. And so we're seeing a little bit of that transition right now, as far as central banks reacting to higher rates and inflation to inflation via higher rates, and that's shaken up the market a little bit. We saw a lot of that in 2022. I think that the market is trying to do as it always has, to kind of push the central banks back towards accommodation. The interesting thing this time around has been they've been less successful in doing so, which is interesting because for the period of kind of post-crisis up into 2021, it had been a case of kind of central banks bending to the will of the markets. Whereas since then, since inflation has started to peak up, central banks have been less inclined to listen to the markets and kind of have kept to that higher for longer policy track. Into 2023, we're seeing markets continuing to try to kind of push a narrative of peak inflation, which has helped the market kind of hold up. But we're at a point right now where I'm still a little bit nervous and not convinced that inflation has indeed peaked. Indicators continue to show signs of sticky inflation in the US and abroad. And so as much as the market would like to see inflation kind of reaching its peak, and we're in a place right now where stocks can feel good about heading higher, I'm not so sure that's the case, and I'm still kind of concerned that inflation is still a problem that will need to be addressed, which I believe could still put downside pressure on equity markets and still result in upside in the US dollar, both on a yield differential basis as inflation pushes higher and the Fed needs to stick to higher for longer, and on a flight to safety given the fallout in equities from kind of higher rates. So I think we're at a point where we've seen a little bit of a shakeup. The market's tried to recover, but I'm not convinced we're necessarily out of the woods as far as equities go. And I still think that the US dollar could stand to benefit. As far as the cryptocurrency markets go, I think that it's a very interesting year right now, 2023, because from a technical standpoint, we've seen Bitcoin bottom down into the 16,000 area. And if we use Bitcoin as kind of a proxy for directional insight, we've seen a really nice recovery out from those lows to the point where Bitcoin has broken back above 25,000, which I believe to be a pretty significant technical resistance area. And so establishing back above 25,000, even breaking back above it, suggests that we have seen a meaningful low in around the 16,000 area, and that we could be in the process of starting to see that next big leg up back eventually towards a retest and break of the record highs. Now, that doesn't mean we can't see the market now drop back below 25,000, but technically speaking, the price action has been constructive. Fundamentally, I think that things are interesting because finally in 2023, we're starting to see fundamentals play out that are specific to crypto in the sense of the benefits and the positive spotlight around the narrative, given the fallout and the vulnerabilities in the traditional banking sector. And so it's been less a focus on, oh, hey, price appreciation, Bitcoin, cryptocurrencies are cool, and more like, wow, there are vulnerabilities in the traditional banking sector, and there is an alternative where you can be your own bank, where you can self-custody into assets that kind of are attractive, they're deflationary. And so it's starting to shed a positive spotlight to the point where we're seeing cryptocurrencies in many ways in recent weeks disconnect from those, stocks down, crypto down, stocks up, crypto up. So I think that it's been interesting to see that play out a little bit. Of course, there are and continues to be regulatory headwinds that need to be addressed and dealt with, which are, keeping the market kind of a little bit, weighed down until that clarity is kind of offered. And that's kind of the next big, place we need to get to kind of get over that hump as far as the, regulatory clarity goes. So cryptocurrencies, I think, quite optimistic on the outlook and quite optimistic on, where we could be headed. And as far as traditional markets go, a little bit more wary and a little bit more cautious as far as global equities go over the coming months.
Yeah, thank you, Joel. Great thoughts there, and I think you're bang on the money. And people definitely looking to see if crypto or Bitcoin, especially, can effectively try and decouple or uncorrelate from the equity markets in a meaningful way. I think there's some really strong fundamentals with Bitcoin, particularly thinking, Joel, we're pretty much exactly 1 year out now from the next Bitcoin halving, which will be roughly sometime early May 2024. I don't know if you saw, do you know Demeister from
Sure.
Yeah, from
Yes.
Adamant Capital, I think, and you may be familiar with he every 4 years or so. Ter and his team, they put out a report called, or the last two certainly have been called "How to Position for the Bitcoin Boom." And I was just reading today, put out one about 4 or 5 days ago, again called "How to Position for the Bitcoin Boom." And the kind of the takeaways are, blockchain analysis indicates that Bitcoin is undervalued, Bitcoin potentially on the brink of decoupling from stocks. Global macro predicament, what you're talking about with the banking sector, is a potential strong tailwind for Bitcoin. And 1 year out from the halving, Bitcoin nation state adoption, still a bit too soon for that narrative to really take hold. But there's murmurings in the background. It just feels like we could be heading into an environment where Bitcoin can potentially shine on the world stage again, Joel.
Yeah, I would agree. I think that clearly there are cycles here, and clearly there's a path of higher highs and higher lows. And we've also seen, as much as there's been kind of critique around volatility in the space from larger players that have kind of kept them away, that trend is kind of moving down and to the right, and so volatility is coming down, and the facts are really there. I mean, the questions that I ask, clients and people that are kind of looking to adopt, many institutional clients that are kind of, hanging in the balance and kind of taking things more seriously, is just, not whether it's really, do you think Bitcoin will be around in 5 years? That's really what it comes down to. And if the answer to the question is no, then okay, then we really don't have anything to talk about. But if the answer to the question is yes, then it kind of means that we have 5 more years of consensus around this extremely limited supply asset. And that would suggest that you're going to have, the economics would dictate that you're going to have more and more demand around this asset, which should, of course, drive the price higher and higher. And so I think that we're in a place where with every cycle, the fundamentals are getting stronger and more compelling. And, we have yet to kind of seen, that full institutional adoption, but the signs are there. We continue to see evidence of, the banks making, the necessary steps towards adoption, whether it's investment in blockchain technology, whether it's kind of bringing on, teams, digital asset teams. And, there have been signs from various names that are kind of moving in the space that the second that, and these are players, as you know, that don't make decisions over the next, 6 to 12 months. This is a 5 to 10 year horizon. And so one can only expect that if Bitcoin is around over the next 5 years, that that institutional adoption will come and that money will flow in size. And so it does lend itself to the idea that we should see a much higher price in Bitcoin.
Well, yeah, that's what we'd like to see over time. And I suppose then, Joel, it'd be good to, I mean, you've kind of just done this, but would love to understand what you see from those institutions at the moment. Is there a pickup on just a general interest in people starting to look again at Bitcoin as a potential asset that they could allocate to down the line in this kind of really fragmented world that we're suddenly in?
Yeah, I think that we're seeing more and more of that. I think, unfortunately, the one kind of stumbling block here is this lack of regulatory framework, lack of clarity, making it very hard for a lot of these larger players to kind of make a full transition into the space. But I believe that all the signs are there and really encouraging as far as the interest in the asset class, understanding kind of what the economics are and what the potential is around this disruption in financial markets and why it's extremely compelling. And so, I think that we're going to get there. I think that there's just too much at stake to kind of, prevent us from getting there. And so it's just a question of kind of getting over that hump. So 2023, has been a kind of a slow go as far as that institutional adoption goes, but the writing is still on the wall and the interest is still quite really there. And it just really comes down to working through this, regulatory uncertainty, which I believe we will get through.
Yeah, well, let's just touch on that then, Joel. I'm sure you will have seen the slightly mixed commentary coming out of the SEC, particularly Gary Gensler in recent weeks. I don't know if you saw that. I don't know, the hearing when he was pressed by a gentleman on whether ETH was or was not a security, and Gary essentially refused to answer. It was pretty awkward to watch, and it's just a little bit confusing for anyone. Even it's confusing from people on the outside looking in. It's certainly confusing for the likes of as you've pointed out, institutional investors, and it's confusing for the exchanges such as Coinbase or any crypto business that is trying to do business from within the US. When it seems like the SEC they make all the right noises, but they don't seem to be making it easy for the industry to work with them, do they?
Yeah, I think that, to be fair, this is a difficult process. We're talking about, regulatory updates and clarity on things that have kind of been in place, laws that you're looking at for precedent that have been in place for 100 years.
Yes.
And so, to be fair, I think that regulators don't want to get this wrong, and they don't want to kind of be boxed into anything. And we're optimistic that regulators want to get this right. And I think that the most important thing is to do as an operator regulator in this business is to kind of take that responsibility on ourselves and to make sure that we're doing whatever we can to kind of be providing, a regulatory compliant type of structure for our clients, so that we are, doing whatever we can in the interim. I think that that's what's the most important thing, and that's certainly what LMAX Group is trying to do. But I do think it's a function of hopefully regulators understanding the value proposition, understanding what this means for innovation, and the economy overall. And so it's just a question of hopefully wanting to get it right and not kind of be too quick on making any decisions, which obviously leads to, again, that lack of clarity, which can be frustrating, especially for players that are kind of doing everything they can and that is required. So I think that we'll get there. I think, again, it's frustrating right now, but I'd like to think that regulators are just trying to make sure that they have everything they can to make the right decisions.
Yeah, and you have to believe that regulators, they do want to make the right decisions, but that we see this time and time again with the rise of new asset classes, or more particularly with new forms of technology. Certainly saw it with the internet. Seeing regulators and politicians grapple with crypto and how to get their heads around it, how to understand it, how to regulate it, how to encourage innovation while protecting investors. And I think we're about to see the same thing happen. We very much are with the rise of these large language models and AI. And again, it's just that the technology is always 3 steps ahead of the politicians.
Yeah, I'd say more than 3, but yes, definitely the point is well taken. Yes.
I'm curious, Joel. You're a trader, right? So I guess you're a trader first and foremost. But I had a look through your Twitter, and I can see that you're deep into crypto, digital art, NFTs as well. So is it hard sometimes do you kind of keep within a dispassionate, if you like, trader mindset, or do you have particularly strong views on different crypto assets yourself? Do you favor Bitcoin versus Ethereum, or these are just digital assets to trade?
Yeah, so this is obviously I answered this on a personal note, and not as a strategist at LMAX as far as trading goes, and my own personal positions. But as far as that goes, the interesting thing about it, which perhaps on the surface is somewhat ironic, is that my outlook and my approach towards cryptocurrencies and digital assets and NFTs is much more one of which is an investor, a kind of a buy and hold, versus what I've done in these more stable traditional markets and FX markets, where I've been more kind of a position trader, and I'll take in and out, and I'll kind of see where I think there are opportunities and kind of be getting in and out and trading, right? And so I think a lot of that is rooted in kind of this idea that we're very early, recognizing that we're in this new period of realizing the value in digital assets after 20 or 30 years or whatever it was of the internet, and kind of finally getting to a point where we have mechanisms in place by way of Web3 technology, blockchain, and cryptocurrencies, and smart contracts that allow for the monetization of digital assets. So I just feel like we're so early in kind of building these next layers, that I feel like taking on exposure to these things are things that I want to kind of have exposure to on a longer term basis. As far as Bitcoin goes, again, it's the same idea that a lot of people talk about Bitcoin when it was trading under $1,000, under $100, but the reality is, if we look at this and the potential, I still think we're quite early. And when I look at this, I think about it in terms of Bitcoin sub 100,000 and Bitcoin above 100,000, and kind of anything sub 100,000, I believe, to be early within this new story that we're seeing as far as kind of the emergence of digital assets and cryptocurrencies. And so, as far as how I view Bitcoin versus Ether, I view them as complementary to one another. They both kind of serve different purposes, in my opinion, and both kind of can work together in wonderful ways. Whereas one is kind of more focused on being this asset, this high security asset that kind of is a store of value and something that can kind of is extremely limited in supply and can be used in that way. The other one is kind of like an asset, used for that uses the benefit of smart contracts and technology and innovation through projects and organizations that come up that are building things. And so they serve different functions, just in the same way that, gold and equities serve different functions as far as, where their places across, portfolios. And so Bitcoin to me is at the core, at the foundation of everything. And so I certainly hold Bitcoin in kind of high regard, but I also feel very strongly about Ether as well, and what's going on with Ethereum and other cryptocurrencies within the space. So and again, as far as NFTs go, to me it's just been exciting to see these next layers built on top of currency, where we have the emergence of art and the realization of value in places that we never could realize value before, which is kind of it gives me chills. The idea of just even on a basic level of an artist who's had so much talent, that equally talented as any artist that's come in the past, but they choose to use a digital paintbrush versus a real physical paintbrush. And so why should they be penalized for that if the talent is on the same level? We just haven't had mechanisms in place to be able to kind of realize that value. Now we do. And so, my view is kind of with this stuff more kind of buy and hold and invest.
Yeah, that's a really refreshing answer, and I enjoyed that, Joel. And I think, look, you're exactly right. But it's a great point. Bitcoin, which so many people see as kind of the very conservative choice, if you like, which I guess it is compared to many other newer digital assets. But Bitcoin itself has only existed for whatever it is, 14 years or so, which is not long, but it is long enough to begin to build up a bit of a Lindy effect. But yeah, I mean, that's a great way to think about Bitcoin. Anything before or anything below 100K is early, if only, what is it, 2% of the people on the planet, something like that, have a little bit of Bitcoin. And it's just good to hear a trader say that, Joel, because I think, as I'm sure you'll be aware as well, the problem with crypto, particularly with, I suppose, new retail participants in the market, which, we want to see that. We want to see that global adoption, but too many people get the wrong idea and they think they have to try and enter the crypto markets and then learn to trade. They think it's all about trading, and they don't necessarily understand that if you are trading, you're trading against, well, people like yourself, Joel, and, institutional traders, some of the smartest, meanest minds on the planet. And that's not really a good idea for a new entry into the market to trade against, is it?
Yeah, no, it's not. And that's why, it's so important, where we're kind of in a place where we're lacking in kind of regulatory clarity. Often there's many kind of institutions or organizations that come up to try to take advantage of that. And unfortunately, that kind of puts, maybe cryptocurrencies in a bad light, but not for the right reasons. And it certainly is kind of a false narrative in the sense that, it goes against everything that, what this world of decentralization is about, and kind of being, to be able to be your own bank and not have to worry about, inefficiencies that kind of corrupt, governance, centralized governance systems. And so, a lot of the things that we've seen in the fallout and the turmoil that we've seen around cryptocurrencies is kind of been all about centralized bad governance practice from these centralized institutions. And so, it's really important that people that are coming into the space understand what the value proposition is. It's also important for people coming into the space on a larger level to have the necessary solutions in place that want to have custody solutions offered through institutional operations like LMAX Group and LMAX Digital, that can trust and kind of feel good about kind of having that money in custody and to have those solutions where they can feel good about the business practices. And so we're in a place right now where we need to make sure that the right people are out in front, and those that are kind of not doing what they need to be called out for it. But there's so much potential here, and we believe in kind of where we're headed is a wonderful place, and there's so much opportunity. And just to think about, Bitcoin coming up only, over the past several years, and how much it's afforded opportunity to people across all different demographics, all different ethnicities, right? And you have, being at a Bitcoin conference is seeing, how disruptive ththings have really been as far as, this rotation and this opportunity that's been given to people who may not have had the benefits of kind of wealth over the recent generations, but all of a sudden, because they kind of see and they realize the potential here, they're able to kind of get in and position themselves. So we love the value proposition, and we're really optimistic. And, it's just a question of, doing the right things in the interim and holding ourselves to a certain standard that, when those opportunities are there, these people are in a position to really kind of benefit.
Yeah, very much so. And so at LMAX Digital provides custodial solutions as well as a trading engine.
That's correct. And again, I think that this is important for participants to know that because it's one thing to self-custody, which we believe in that value proposition, but at the same time, institutions that have billions and billions of dollars need to have solutions in place that they can kind of feel good and comfortable about the security and the safety of their funds. And so, those services are provided.
Very good. I said, we would touch on NFTs, and you did a little bit, Joel, but, NFTs have been hit even harder, really, in terms of, I suppose, the crypto bear market. I mean, you said at the beginning of the show, Bitcoin probably bottomed out at around 16K US back in November last year, and effectively has prices almost doubled since then, so staged a reasonably decent recovery. NFTs, not so much. There's been quite a significant drop in terms of, whatever metric you care to name, trading volumes and new people coming into the space and new projects as well. But do you see that as just it's just a similar cycle, and the NFTs were so new? So we had, of course, this incredible boom and this incredible rush of new projects, NFT trading, massive boom, and then, of course, we're now in the doldrums, but it'll come back.
Yeah, I definitely agree with that sentiment, and I share that sentiment that this is just another cycle. Again, when you're in the Wild West of these markets, unfortunately, you get a lot of garbage that kind of is kind of worked into it, and an enormous amount of it. And so things shift in a way where the focus is not necessarily in the right places, and so that eventually is exposed and washed out. And so we're seeing that. I love when we see these washout periods and these cycles, because ultimately there is a belief in the fundamental value of realizing value in these digital assets and what they represent. And so we need to see these periods of washing out to kind of get rid of all that froth and the excess and the garbage, effectively, a lot of that. And then once we start to see rotation back in, you see it kind of, there's a flight to quality within the NFT space. And it kind of is a wonderful signal that even when you're in these bearish markets within NFTs, you can see on a relative basis which ones are outperforming. And so it's a really good cleansing period through these cycles. And yes, I fully expect that there will be, as we get more market participants coming into the space, we'll continue to see this market grow quite a bit.
Yeah, well, I suppose another way of putting it, and this is the headline on your Twitter: the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. That's a famous quote by John Templeton, but I think, Warren Buffett said something similar, didn't he?
Yeah, I definitely believe in that. And I think that it's important that if you believe in what you're trading or the asset that you're invested in, if you fully believe in it, and you're kind of behind the value proposition, then applying that really can prove to be quite helpful through periods of excess craziness. It's helpful to give you a calm head, and that's kind of the way things that have gone over the years.
Let's it's been fun talking to you, Joel. Let's go to a quick break and then we'll come back and we'll finish off with the very famous Crypto Conversation hot take round. But before we do that, could you please just give a shout out to your Twitter profile so people can find you on Twitter, and in terms of LMAX, the LMAX Group, LMAX Digital, for anyone listening that is perhaps interested in looking more at what you guys offer, where should they go? What should they do?
Yeah, they could just check out LMAX. Simply just go to, I believe you can go check it out at our main website, which is allmax.com. And you'll be able to find out all the information on all of the services that we offer. And as far as my Twitter handle goes, you can just go check out at Joel Kruger. And you'll be able to find me on Twitter. It's JoelKruger at Joel Kruger. When you see the green zombie MFer, you'll know that it's me.
That's exactly right. All right, let's go to that break and then we'll be back.
Look, we'd all like to say we're pro traders, but the reality is we're probably not. But with BitGet, you don't have to be. Why? Because BitGet is the world's largest copy trading exchange. Instead of you muddling through it on your own, feel confident. BitGet allows you to automatically copy trade from over 80,000 elite traders with 24/7 support on our secure copy trading platform. Start following expert traders on bitget.com. Check for details in the show notes and join BitGet today.
All right, we are back, and I'm with Joel Kruger. Joel, of course, is a trader and a market strategist at the LMAX Group and LMAX Digital. Joel, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Let's give it a try.
All right, let's give it a try. I'm just going to run some questions at you, Joel. Question one for you. You kind of answered it before, but where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Yeah, I think that, again, Bitcoin's at the core of everything, but I believe that there's a good kind of value in alternative cryptocurrencies like Ether and the things that we're seeing on the Ethereum blockchain.
Of course. Joel, what would you say is your firmest conviction crypto opinion?
Just my firmest and most conservative but stable recommendation is just to continue to look to build exposure to Bitcoin.
Yeah, just dollar cost average, a little bit of Bitcoin, a little bit of Ethereum, set and forget, wait 10 years, 20 years, right?
Yeah, I think that's instead of, a lot of people are trying to focus on these 100x, 1000x returns, and yet we're still early with these kind of, assets like Bitcoin and Ether. And I am of the opinion that if you want to kind of be in the space and take on exposure and still have a nice opportunity for returns in a safe way, Bitcoin is the best way to do it. And of course, Ether as well is compelling.
Very much agree. Look, Joel, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. As you'll be very aware, 10 years is a long time in blockchain. But hey, let's look forward. 10 years, what does blockchain start to look like?
Oh, I think that, we've been in a place where over the past several years, a lot of the focus has been on the back end and kind of not in a place where we can talk about this space where it's kind of front end focused, where it's more relatable. I think we're starting to see glimpses of that. I think in 10 years, it'll be a situation where I guess the best analogy is, when you heard Jeff Bezos talk about the internet, at the start of the internet, there's clips of it and it sounded like he didn't even know what he was talking about. I think in 10 years, every person out there will be able to kind of have a very clear idea of where we're going in the space and really much more front end focused.
Very much agree. All right. Well, sci-fi author William Gibson famously said that the future is already here. It's just not evenly distributed. With that in mind, Joel, can you think of an example of the future being here right now, but most people aren't aware of it?
Ooh, well, I would say that the clear answer is through decentralized technology and decentralized finance, and just how disruptive it is. I think that these solutions are sitting there. I think that most people don't have a handle on what the possibilities are, and so yeah, that would be given the topic of our conversation, I would say that this is a perfect example of that.
Yeah, like it a lot. All right. Trading, Joel, there's that kind of famous statistic. I don't know, something like, what is it? 95% of people just are terrible traders and wouldn't make it as traders, or maybe it's even higher than that. How do you know if you have what it takes to become a trader? Or what would you say to people that want to try trading out or want to try and make it as a trader without blowing themselves up a million times?
Yeah, I think the best piece of advice I can give, and the broadest piece of advice I can give, is that you need to it's not that complicated, and all that you really need to do, the best piece of advice I can give is, instead of focusing on trades that you like, which will happen every second of every day, your brain will tell you that now that we have access to trading, just on the tip of our fingers through our mobile phones and wherever, it's very easy to convince yourself that you like a position. The problem with that is that you're going to be taking a lot of positions, and they're going to end up not doing well. And you'll look back and you'll say, why did I take that? And you'll say, why did I take that? I only liked it. I didn't love it. And so the clear answer here, and my best recommendation, is if you want to succeed, just start by taking things that you absolutely love. Take positions that you absolutely love, because you'll find that it's acting as a wonderful risk management tool where you're filtering out a lot of trades. And you're taking a lot less positions, and the positions that you take that you love have probably are going to have a much better chance of succeeding. And on the other side, if they don't work out, and because clearly positions are not going to work out at certain times, you're not going to have any room for regret. And a lot of the problem in trading for many people is the psychological impact and kind of the snowball effect. But if you can keep your head in the right place and keep it kind of as strong as possible, and be as mentally kind of focused as you can be, you're going to succeed. So my recommendation would be just to don't stop taking trades you like, and only focus on taking trades that you love.
I like it. Sounds good. I like it. Thank you, Joel. All right, time to finish this off. Finally, what is your favorite science fiction book, film, or TV show?
I'm going to let everybody down that's into sci. I'm not really a big a sci-fi guy, so I don't know that I can give any wonderful answer there. So I'm going to let you down on my last answer, because I don't have enough insight to give a recommendation on anything sci-fi, other than maybe if I want to whet some people's appetites, maybe like a Star Trek episode here or there. I've enjoyed.
Look, Star Wars, Star Trek, The Matrix, all perfectly acceptable answers to that question. And in fact,
no, I could have said The Matrix. Oh, that was okay.
It's pure sci-fi. It's pure sci-fi. It doesn't have to be super nerdy, niche sci-fi books. Even though some people, are well indeed super nerdy niche sci-fi people, and they'll reel off a list of books, but would have accepted The Matrix or Star Trek. Doesn't matter.
Okay.
Joel,
right,
it has been
sorry to all the sci-fi people out there. I let you down.
Joel, it's been super fun talking to you today. Nothing else to say really, except again, please, point people in the direction of your Twitter, and of course, the LMAX Group, LMAX Digital.
Yeah, just again, if anybody wants to check out what we're doing at LMAX Group and LMAX Digital, LMAX Exchange, just go over to lmax.com and you can get information. And as far as I go, my Twitter handle is @JoelKruger.
And of course, people, links will be in the show notes. All right. Thank you very much, Joel. All the best, and bye for now.
Thanks, Andy. Bye.
All right, there you go. That was Joel from LMAX Group, LMAX Digital, lmaxgroup.com, or indeed lmaxdigital.com. If you're in need of an institutional cryptocurrency trading market engine and custodial service. Yeah. Hey, Joe was a smart guy. He was great. Very much enjoyed that. I hope you did too. I hope you learned something. Please make sure you are subscribed to the Crypto Conversation in whatever podcast app you are using. But that is today's show. Thanks for listening, team. This was the Crypto Conversation for Brave New Coin.